There we go. Perfect. Okay. So let's just flip this over. We'll go to that side right here. And okay. So lots going on. Lots going on here. Let me just get the notes out here, my list of things that I wanted to cover. 2017 was the lowest volatility market on record in over 100 years. And 2018 changed. We had mean reversion in terms of volatility. Trading opportunities blew up a lot, and we had a great close to the year. I had a good year trading. I made money trading last year. I'm proud to say that. A lot of people lost money just on the wrong side of the market. So overall did well. Looking to build on that going forward. Couple of the trades, if you guys saw the last Wednesday webinar that we did, I think it was 2 weeks ago, we had a couple SPX and RUT trades. Okay, those both made money. We did really well in the short side, covered actually ahead of the bounce. So if you were involved in those, you kind of know what was going on. The other thing that we're kind of starting off with, and the overarching theme, is our ongoing trade war with China. We've got futures down 1.6%. They're actually pressing lower into the open here. The trade war is just kind of rambling, kind of pressing on. We saw some PMI data from China that was worse than expected, indicating a slowdown in their economy. So that's hurting our futures. There's a previous factory orders number that was also weak. And China just continues to show a lot of slowdown. One thing that I was just discussing with the members is I'm wondering if this is a situation. If you guys remember a couple of years ago, there was a point where the worse the economic data was in the U.S., the better the stock market did, because the Fed was going to be forced to stay on hold, keep a very low accommodative monetary policy, and that just propelled stock markets higher. I'm wondering if that's going to be kind of the same thing with China. The worse the data gets in China, I'm wondering if that means that Trump is being given credit for pressuring their economy enough to the point that they're going to give in and kind of work with us on the trade war. I'm not saying that's happened, and I haven't heard anyone else say that. It could be totally off, but I'm just kind of wondering if we start to fade that gap in the open, the gap down in the open, I'm wondering if that might be the direction that we're heading in. So I actually want to start off here first with some charts in China. I actually want to start overseas here first. So let me just get my comments and questions up. And in theory, guys, your comments should be coming up in this YouTube screen here, but I don't think that's working. So just ignore that for now. In fact, I don't think it's working. So let's do this. Boom. There we go. Okay. So to start, some Chinese markets that I wanted to take a look at. Let's take a look at FXI. In fact, this is the Chinese ETF, and the first thing I want to show you is that the Chinese market is in a pretty weak, terrible situation right now. And if we go here to the ETF FXI, here's the concern I have with this chart right here. We've done a triple top in the FXI going back to 2008, okay? We have done 3 significant tests of the 200-month moving average in FXI. We did it here back in 2009, 2011, and 2016. What happens, I wouldn't say if, but when we get another test excuse me, of the 200-month at 35 and change, 34.80. Okay. Not only that, but the other 3 times that we have approached, we've shot through by a considerable margin. The only time we held perfectly was here in 2011, where we went right down to it. So, we're at 39. We're talking $4 as a percent of 39. That's pretty significant. And if we break, that's a real problem. So that's FXI. From there, let's take a look at the actual market that the FXI represents, which is Hang Seng. From an Elliott wave point of view, I don't see a different way that the Hang Seng could be counted coming out of here. We're looking at 1, 2, and then potentially inside of wave 3. We've got that move to go. We are getting very, very low in this wave 4. And if 24,370 breaks, that's going to be deemed wave count validation. And this count is incorrect. Okay, this count is incorrect. And we're likely headed lower to the next test, which would be 21,000. That's going to be the old wave 1 high. So that market looks incredibly weak. On top of that, there is a significant double top up here from 2007 again. Okay, so it's really hard to even argue that that's an impulsive rally here in the Hang Seng. That's very worrisome. From there, let's take a look at Shanghai. So we're going to go to mainland China. I'm giving this guy the benefit of the doubt and to say that this is A, B, and C down in Shanghai. We've got a cluster of support from 25.8 down to 24.1. If that zone of support doesn't hold, it's going to be very questionable that this in Shanghai is an ABC sell-off. If you break through 2,400 in the Shanghai, you're probably going back down to 2,000, and this whole thing is not an ABC correction. It's likely something more. So we really need to hold like 2,500 in the Shanghai, which is interesting because the S&P is only a couple points above that. So I think China is obviously reflecting a global economic slowdown. I think the only thing that could save them if obviously the economy turns back up and these trade wars kind of come to a halt. Rounding out the rest of the world, let's take a look at Germany very quickly. I had in the DAX, and I just made this count adjustment for the members. I had this as a potential wave 4 pullback that matched up against one of these wave 2s right here. But we just broke through. Don't you love robocalls in the middle of a webinar? We just broke through wave count validation at 10,004 in the DAX. I don't see any other way, guys, to label the DAX as a completed 5-wave move from the credit crisis lows. A test of the prior 4th at 8,699, I think, is to be expected. So we've got a drop from 10.4 to 8,600. That's a real problem right there. Okay, so that's going to be a trade we're looking to do. So altogether, guys, we have weakness. We've got weakness in China. We've got weakness in Europe. Oh, and one market that I didn't talk about as well, it's kind of the same thing, is the Nikkei. The Nikkei, same concept, okay? This is what the German DAX chart looked like before. I was looking for just trying to give this uptrend the benefit of the doubt, looking for a wave 4 drop and one more push up in 5 of 5. We need to hold the wave 1 high down at 17.1. It's a ways to go. It's arguable if it's going to be at 17.8 or 17.2, but we really need to hold support in the Nikkei, which has actually been a stronger market relatively speaking. But if we don't hold support, same thing as the DAX, we have a completed 5-wave move up from the 2009 lows. That's concerning. That is concerning. So bringing it back to the U.S., okay? Bringing it back to the U.S., let me just make sure we got our questions up. And guys, I'm not skilled enough. I see your questions coming through. I'm not skilled enough yet on this software to interact with both. I love the comments and questions. Trust me, and I will get good enough at this software to be able to interact with you in real time. I'm just not there yet, but I will crush this software in 2019, and we're going to have like a full production for you. So please don't think I'm ignoring you, okay? It's too complicated, but hope you understand. Okay, so S&P, and I will interact with when this recording goes up. I will interact with the comments. If you guys have specific comments throughout, I'll be able to respond to you on text. I'll write back to you. So go ahead and on the recording, if you're listening, if you have questions, throw them in there. Okay, so S&P. Let's start up here. First thing we're looking at here is, what is this decline from September 21st? Here's the issue as we see it. If this is corrective as an ABC, this level really should have held. This is the 100% relationship of A compared to C. That's indicative of a corrective structure. We dropped significantly below it, rallied back, and now we're looking at a 1.6% gap, depending on where fair value is here on the open. If we start reapproaching on the downside, okay, what does that mean? Does that invalidate this ABC correction? No, not yet. To give you the context of what I'm looking at a higher degree, this is one of my two wave counts. That three-wave move that I just described is this on the weekly. It's possible that we're heading into a massive triangle in 2019 and even 2020. If you look at this 4v2 time relationship, 100%, meaning the time elapsed in the wave 2 back in 2010 and 11 will equal the time elapsed in this current proposed wave 4 in March or February of 2020. So that puts you out even to 2021 if it's a 1.618 time relationship. It's possible we could go into a massive triangle. It's so early to tell here. I can't make that commitment yet, but it's possible. Okay. Or, okay. And actually, before I put the or on you, if it's a triangle, that means we do have one more move to go before 5 of 5 of 5. And then a massive, not recession, but a depression will set in. That's just the way markets work. Okay, not trying to be controversial. Another wave count is we've already seen the top, and we're headed into a significant decline. This 5-wave move that I'm showing the S&P matches up what I just showed you on the DAX. China is a mess. That Chinese stock markets, the Shanghai and Hang Seng, look they were never even in an impulsive rally, and then that's how the S&P would match up. Right there. Hope it's not the case. I don't know about you, but I'm not in the mood to go into a deep recession. But that could be the case. For the next couple weeks in our trading with our members, it doesn't matter. And I'll show you why it doesn't matter. This is the count that says we go ABC down. Okay. In a good ABC correction, let me just go off to the side here for a second. And a good ABC correction, if it's a zigzag, which is the one of the two ABC corrections in the Elliott wave world, if you look inside the price structure, it would be 5 waves down in the first push, which is green 1, 2, 3, 4, 5 in A. And then it would be 5 waves down in C. I'm drawing a little model here for you. Okay, so 5 down in A, corrective B, 5 down in C. The problem as I see it, as I delete this model, is even if this is C wave, guys, I only count this decline in blue C as a 3-wave move so far. 1, 2, 3. Which means I still think with this morning's weakness, I still think we've got a 5-wave move to new lows down to 2,300 in the S&P, down into that zone right there. That's going to happen whether this is A or this is 3. Doesn't matter. Doesn't matter. So from our members, we're going to be positioned in the options market to take advantage of that move. Here's a word of caution. Okay, after we get that move, even if we're looking at a significant bearish impulsive count, once you get this final wave 3 push right there, you're going to go into a series of back and forths. The easy money on the short side, which we told you about, I had the live trade on in the S&P and the RUT in the last video. I can show you the trades if you like, and in fact, I will. We made the money there. Okay, so let me just see if I can go back and just to show you we put our money where our mouth is. And I was watching some pretty funny comments online about actually people not being able to trade with Elliott Wave, and I thought that was pretty funny. So I'm wondering if Thinkorswim will let you go back to, yes, it will. Okay, so the trade that we had on, was this one right here. We bought the butterfly centered around 24.50, bought it for 15.35, and you can see I did a 4x6x2, so pretty good money into that one. Bought it for 15 and sold it for 29.35, so basically a double on that trade in the S&P, and that was done live with our customers, and I showed you that exact trade. I took another shot in the short side here based on a 2300 butterfly, and I have a feeling we're going to put a very similar trade back on for what I just described. Bought that one for 810, sold it for 845, so just a little profit there. And then the RUT was the other one back on December 6th. We put a butterfly on centered around 1300, bought it for $4.23 and sold it for $11, almost a triple. So it was good. The point of me showing you guys that is I think the easy money on the short side is over because that's wave 3 of 3 that we caught right there. Now what I'm saying is, okay, so we're going to have wave 4 resistance. You're going to come back, sell off, but then you're going to go into a wave 4. Okay, then you're going to go into a wave 4, back up to the area of the prior fourth, drop down in wave 5, completing the higher degree wave 1. At that point, then you're going to do another ABC up. So if you look at the time scale down here, guys, this I think was the easy money in the short side. I mean, this is going to be a good move once wave 4 completes, but I think all in all, you're going to be pretty well range bound between 2,000 and 2,600 for the first half of 2019. You better be ready to trade this because this is going to be back and forth crazy whipsaws. I think that's going to be the case whether this is a bearish impulsive count that foretells an absolute decline, or if this is an ABC, you're going to do that, you're going to do that, back down. We go down, up, down in B, up in C, back down in higher degree C. Like, I think it's going to be pretty choppy trading here for the next 6 months. So I hope you're ready for it. I hope you're ready for it. Okay, so the other thing we got to talk about is earnings are coming up, and I think that's the one thing that can potentially save this market. We have earnings coming up. Financials kick it off now. Alcoa doesn't matter anymore. So financials kick it off, and we can actually do a scan of those earnings that are coming up. It's obviously going to be JP and Wells and Citi and Bank of America. So we can go over here and go scan. Let's do earnings in the next, we could probably do 15 bars. Scan. By market cap. So we've got J&J coming up here on the 22nd. There's JP Morgan on the 15th. Bank of America 16th. UNH. So the 15th is really going to kick us off. Actually, Citigroup is on the 14th. Interesting. Netflix on the 17th. All right. US Bancorp on the 16th. So 14th, 15th is gonna kick us off. And I think these earnings are going to be very, very important. So we got to watch out for that. Two sectors that I'm going to be focusing in on with our customers, very weak. Number one are financials. The financials, from a technical point of view, look horrible. Same kind of concept, guys. Is this ABC down and this is going to be a correction that finds support? Or is it going to be 1, 2, 3, and we're looking at an extended decline? If you look at the financials, okay, and think back to that ABC zigzag model that I drew for you, two of the telltale signs of a zigzag is one, the first wave breaks down into 5 waves. This happens to be a diagonal, which is still a 5-wave move, but it's a diagonal. And then the C wave move also breaks into a diagonal. On top of that, the distance traveled in A is approximately equal to the distance traveled in C. So that's called a measured move. AB equals CD, two-step pattern. There's a lot of different ways to call it. If you look at the model over here, this 3V1 study, that equality between would-be A, B, and C was at 25.00. We got crushed through that. We broke well through 100% and got down below the 1.618. When you start breaking below the 100% and get down to the 1.618, that suggests this is not A, B, C, but in fact 1, 2, 3. The good news is a 1, 2, 3, 4, 5 impulsive move starts out the exact same way. 5 down, usually 3 up, and 5 down. It's just how deep do we go? Do we get through the 100% relationship of A versus C? Or if you get down to the 1.618 like this one has, because you got down to the 1.618, starts to suggest that it's not ABC, but it's in fact 1, 2, 3. And that's what we have to be concerned about. If you take a look at these financials heading into earnings, that's the first concern is we're down to the 1.618. Getting off the weekly over here to the daily. There's blue 2. Here's more detail on blue 3. Here's another good trade we're going to be looking at in XLF. And this is going to take us right into earnings. So that'll be interesting. There'll be some earnings trades that we'll be doing here next week. But same thing. So we go up in 3, rally up in 4, or down in 3, rally up in 4, sell down in 5 of 3, back up in 4. You know, there's going to be likely a push, but I think for the first half of 19, could be a lot of this. So you better be on your toes if you think you're going to trade this. Okay. Questions, comments, let me know. I'll take a minute here. Again, I'm so annoyed by that opening. 5 minutes of dead air, but as I said, I will get through this. I will figure out this software and do a nice production for you here. But let me know. Let me know. Stargazer, Todd, 5 of 5. And what mark are you talking about? 5 of 5 will probably be an ending diagonal. It always is. No, it's not. I've actually had a conversation with Bob Prechter in his office, and he would actually say that wave 5 is usually just a very pretty 5-wave move. Just a normal impulse, like no... I even think he told me there was usually no elongated waves, and I don't want to misquote him, but kind of like what this Dow wave 5 was. Him and I were talking about this. It's just a clean 5-wave move. So I actually would say that Prechter would say no to that. Thank you very much. Thanks, Todd, for providing this info. Hope you and your family have a happy new year. Thank you very much. You as well. Okay, what else we got here, guys? Lots of comments. This is Motive Wave. Yes, we're doing a lot with those guys. They're a very close partner with us, and you can get more information on Motive Wave, which is the software I'm using, at our website. That's just tradinganalysis.com. So go up here to partners, right up there on the tradinganalysis.com website. Just go up to partners. The broker I'm using, the platform I'm using is Thinkorswim. Our charting software is Motive Wave. The computer that is running this software and all the trading is, oops. So back over to tradinganalysis.com. Okay, trading analysis. Then you go up to partners right here. and our brokers, Thinkorswim, Motive Wave, which is the platform, and Falcon Computers is what I'm using here on as my trading computer that's powering this. More information right there at tradinganalysis.com. We got a new website coming out. We've got our crypto guys hard at work. We do have positions working in Bitcoin. We did just miss an Ethereum entry, so that's happening. Lots going on. Lots going on. What other questions, comments you guys have? Oh, another thing I meant to mention. I'm going to be involved in this event in February. This is going to be fun. This is going to be in Breckenridge, Colorado. It's put on by my buddy JC Peretz and Brian Shannon. And it's going to be 2 days of technical analysis in person in Breck. Obviously we're going to go skiing. We have some really nice nice lineup. John Jarian's going to be there. The guys are all going to have a go and show you what we do, interact, kind of talk back and forth, and we're all going to go skiing together. So I'm kind of looking forward to that. I actually got out yesterday back here in Queensbury, where I'm from, West Mountain, where I grew up ski racing, and which eventually led me to race Division I in college. So I dusted off the boards yesterday and got up and skied. Felt great. The technology now is amazing. If you haven't seen the new skiing technology, oh my God, the skis just turn for you. So come on out if you guys want. Love to have you, and we'll have some cocktails. We'll be up skiing, and I think we're going to be skiing in the morning, and then we're going to meet in the afternoon to do some market work. So chartsummit.com, check that out. That'll be fun. Okay, so what other questions, comments? Let me know. If you're watching this on the recording, or I think you're able to see the thumbs up button. If you guys wouldn't mind, if this was helpful, if you had maybe put a comment in there, and just hit the thumbs up button, that'd be great. Just hit that thumbs up right there if you thought this was somewhat worthwhile, which is going to be right here. Okay, hit that thumbs up and maybe put a comment down there. Anything you want me to answer or address, I certainly will. Sure, I'll pull up a I'll pull up a Bitcoin. Alex does our crypto. Alex and Terry head up the analysis, and they actually had an amazing. Hopefully, you saw the video. I'm pulling up Alex's workspace right now in Motive Wave, and that's the cool thing that we have is as Alex updates his wave count and Terry updates the wave count, my charts, which are automatically linked, I just immediately see their wave counts, which is awesome. So Alex put a buy recommendation out on Bitcoin at 3,100, and I hope you guys saw it. It was one of the most amazing calls I've seen. The whole world was just saying Bitcoin's over, Bitcoin's over. He had a buy point in at 3,100. It got down to 3,120. Just missed it. If it winds up being the low, it's going to be a career call for Alex. But he missed the original entry 3,100 by 20 bucks. So we did buy the pullback here. We do have entries on the pullback here. We've got stop losses working based on a potential 5-wave move up. Let me get off of the daily down to the 3-hour. So it's looking pretty solid in terms of a 5-wave impulsive move up, ABC move down, just above fib support. We're beginning to move up. We're long from here, right at the entry. So if we can get a push above 4,000, I think we have the potential to go into a wave 3, and the Bitcoin collapse is now coming to a close. Ethereum up 8% this morning. Whoa, pretty good there. I think we just missed entries on Ethereum as well. We're trying to get in at 111 and got down to like 114 or 15 or whatever. Looks like Alex is calling this as just a WXY, though. This is a corrective structure, so he's not saying that the lows are in yet. Okay, so that's what we're looking at in Bitcoin. He's also covering Forex quite a bit. And, yeah, we got lots of good stuff going on here. See other questions. Lucas, good question. When's the vlog together with Bob come? I have to just, all I have to do is, it's on this computer. I just have to put music to it. This is the hardest thing about vlogs, is putting freaking music together. It takes forever. I don't know how professional vloggers go and find their music. So yes, I have it done. Okay, guys, we're going to leave it there. 5 minutes before. Yeah, we're going to leave it there, guys. Great questions, and thanks for bearing with me on the open. That's annoying on the audio. But we'll figure it out here as the year goes on, and we're going to have a lot more features and bits and segments and fun things. One of which I thought was really interesting. It's a tweet that I found from Uberfax. Is this, and I'll let you think about this for a second. Daily fact. If, and I'll put it on the screen for you. How about this screen right here? Daily fact. If you keep traveling north, you'll eventually go south. If you travel west, you'll never travel east. Think about that one for a second. Pretty cool, right? Anyway, we'll leave it there. And thanks. We'll see you guys next week. We are on full steam, and we're going to be having some guests on and obviously developing this out. So stay with us. This is still very much in beta. We're just kind of getting this new cool live streaming thing figured out, and we'll have some fun going forward. Best of luck in 19. Check us out at tradinganalysis.com. We're working hard. I got a great team working in front of the scenes and behind the scenes. So come on over and join the team of we have a great community at Trading Analysis. Also, we have a very active Facebook group of members. I understand there's some resistance to Facebook, rightfully so. That will evolve, but we have a very active community of like-minded traders. So we trade real capital. I show you our live positions, as you guys know. Transparency is what we're looking for. We do short-term option trading as well as longer-term portfolio management. I do them both. So we're full service. And usually I don't look like a college kid, but getting the content ready and trying to get the production ready is more important than putting a decent shirt on and combing my hair. Hope you don't mind. See you guys, and we'll catch you on next week's webinar if we don't see a trading analysis first. See you guys.